Yo, what's up? It's Tommy from Breathe Carolina, and welcome to the Daily Dip. On today's episode, we have stuff from Hugh Henney, Thick Teddy, Gary, the Mystic Mac, Mr. Prez, and of course,
No, Breathe Carolina, this is my show. You can't take it. Look, we've got Neo, we got Hugh, we got the whole gang in here, Gary included. So look, we got a new Daily Dip, shit you need to know about the market going on now. Bam.
Hey, what's going on, guys? This is Thick Teddy back at it again on another Daily Dip. And today I'm doing 4 swing trades that are either on my heavy watch list or that I'm adding heavily. And just to keep you guys updated, I am still adding and still holding SPAC and Blue. These are just some other ones that I want to talk about. So 3 of these I've talked about before, either on here or on my Twitter. It's an update and what I'm feeling about them. And then one of them is completely new on my watch list. So starting out, we are going to talk about PLM, Polymet Mining, based out of Minnesota, still trying to get their permits to mine. This on the chart, as you can see, is when they had their reverse split. This is when they got one of their permits from the Minnesota government. And then as you can see, we're kind of having a steady squeeze uptrend. So it's uptrending and it's squeezing, consolidating as well, which is really nice. So the big catalyst in the future is September 22nd is Tesla Battery Day. And Tesla Battery Day is important to this. Why? Because Polymet Mining is owned 70% by Glencore. And Glencore has a contract with Tesla to supply them with cobalt and nickel. And Polymet Mining is sitting on 6.2 million pounds of cobalt and a ton of nickel as well. And if during Battery Day, Elon Musk says anything about their contract with Glencore, getting cobalt or nickel from that Minnesota mining company, anything like that along those lines, then we are in line for a huge run-up from PLM. So I'm adding up until the Tesla Battery Day, and I'll probably hold some through. Second up, we have CHMA. And this is Chasma or something. I think that's how you say it. We're going to go to the daily chart. All right, so just going to start off with the chart. So we had this run up here with the Golden Cross when they were expecting FDA approval. And then FDA approval hit, and then the stock halted, and there was a sell-off all the way down to 450. And then we've kind of just been seeing sideways trading, but recently there's been more of an uptrend. Mostly due to the fact that we've gotten a little bit more news on their production and what to expect from that coming in Q4, which they're beginning production in Q3, I believe. And so we have this nice little steady uptrend with an ascending triangle. And as you can see, the 50 EMA is moving towards the 200 EMA, which is great. We could get another golden cross. And so what CHMA does is they focus on a rare disease called acromegaly, I think is how you say it. And they got FDA approval of it, phase 3 everything. So they're ready to produce. And the crazy part about this is this disease, the treatment for it is all injections except for CHMA's recently approved oral drug. And the treatments range from 50K to 165K per year. And there are 8,000 patients in the U.S. alone. So if they get half of the patients in the U.S., 4,000, and then they charge the market minimum. These are both conservative numbers considering that it's an oral drug and not an injection, and people prefer the oral drug. So with these conservative numbers, that puts their yearly revenue at 200 million, which that's already insane. And then to add on top of that, there is a history of acromegaly drugs being bought out by big pharma. So the fact that they have a top-of-the-line acromegaly drug, I mean, in 2009, Recordati purchased an injectable drug named Signifor for $390 million. That's 5.4 times the yearly revenue it brings in. So, I mean, there is a past of acromegaly drugs being bought out by big pharma, so we could see that. That's just speculation, but I like this nonetheless because they're starting production soon. All right, moving on, we have ARAV. So I'm just going to talk about the chart for a quick second here. So ARAV, this little chart here, shows that it's been up to $14.94 within the past 2 months. And then 3 months maybe, we had a nice little dip off on good news. And then we're seeing kind of it was a reversal, but then this bearish cross here kind of stuck it into another downtrend. And now we're seeing another reversal here. We have the long-term support here, and it's kind of bounced off of that twice. And so, like I said, I believe personally with this chart that it was up in the $14 range and $10 range. And then people were expecting great news, and all they got was good news, which that's still bearish for the stock, but they were expecting more. Got the good news, and then sold it because it was not like world beating like they expected. But I'm going to go through kind of just some DD that I have on it now. There are 4 pipelines that they're expecting news for by the end of the year, which that's insane for 4 press release catalysts within the next few months. And the fact that it's all the way down here near the March crash numbers, that's insane. So, and then the fact that there's 3 green candles here is big for me. And then another huge thing, 3 insider buys of 16K shares have came through on 9/15, so yesterday, which that's huge for me too. And I think with the 4 pipelines, I think with the insider buys, I think with the chart being bottomed out pretty nicely, I don't see much downside here, but a ton of upside. All right, and then lastly, for the new one that I have not talked about at all yet. So this is a marijuana play. So I'm going to go to the weekly really quickly. So for the weekly, I just kind of mapped out the long-term support, and we are bouncing off of that right about now. It dipped underneath of it right here on this huge red candle because of an offering that was, I think, like half of what the stock was at then. It was a huge offering so that they could launch their website and launch their product distribution. And so there was a huge offering for them to get some cash, and then it floated down here for quite a while. But then we're starting to see good news, and we're starting to see the possibility of marijuana being legal all through the United States. It's possible, might not happen, might happen. We will have to see. But this is a CBD company, so I'm going to go back to the daily to show you what's been going on recently, and then I'll delete the long term so we can just. So this is what's been happening recently. I charted this. I've been on watching it for a week or two now. So I charted this downtrend just to see when it broke out, and as you guys can see, it broke out with 3 green candles within the last 4 days. And here's our kind of medium-term support. It kind of had support here coming up while it was like running upwards. It ran all the way to 410. And then now we're seeing it kind of pull back, but also starting an uptrend again. I'm not ready to buy yet because I think there could still be a couple more dips, but the 3 green candles are big for me. And kind of just seeing it stick to the support trend line is big for me as well. So I'm going to go to their press releases and show you guys just some cool stuff about the company. So this is CBDMD is the company. Their most recent PR was they signed a multi-year exclusive retail distribution agreement with Lifetime. Lifetime is a huge online health organization that they sell a ton of things off their website, and they're widely known in the health community. So that's big to have an exclusive multi-year deal. They had their first national television advertising campaign, which that's big too. I mean, getting it on TV and getting it out there is huge. MMA champion Daniel Cormier trusts CBDMD to prepare for his fight of his career. That's big too. They have big people that like the product. Their sales are increasing. I looked at their third quarter results. Pretty good sales. Sponsorship with professional golfer Bubba Watson. They have big names on this. So, I mean, and then if we go look at their products, you can look at all of these. I mean, they have bath bombs. They have it for pets, CBD for pets, sleep aid. I mean, I could use some sleep aid sometimes. Topicals for relief. These are like droplets. These are gummies. These are capsules. They have a whole line for pets. CBD peanut butter. Jeez, man. But like I said, I'm just extremely bearish on the company because of all of their big names they have on it and just the products they have. And also another huge thing for me is the possibility of medical marijuana, or not medical marijuana, just marijuana being legalized by the US government. That could be huge. CBD is already becoming almost widely accepted, but it could be huge to just see it fully legalized by the government. So I am watching why CBD huge. It's in my big watch list for the coming days. I have a starter, but it's nothing that I'm willing to like add heavy yet. I think we could see another dip, but I am extremely bullish on this stock, mostly because of what I showed you. Their press releases, their big names, the chart is looking good. They have an upcoming catalyst with the government thinking about legalizing marijuana. So that is my exclusive DD for Dan's daily dip today. I hope you guys enjoyed those 4 stocks, and I hope you guys make some money off of them. Thanks, Dan, for having me on.
What's up, guys? This is Gary. First off, I would like to say thank you to Dan and Hugh for having me back onto this episode. It's really impressive to see what you guys have done with this format and helping all of the new traders. With what I'm seeing in the market, this goes for today and this week in general, there's not a lot of follow-through, guys. I know everybody has been saying wait until September until the volume comes back, and we are in September, but the volume is not necessarily back. So what I'm seeing on this week and especially today is the follow-through is just not there. So I'm sure you guys are noticing a lot of pop and fades, meaning either news will come out or something drops on a particular stock and it gets an initial spike, but very few stocks have follow-through right now. And that's just because the volume is not fully back yet. So what I advise you to do, especially if you're a newer trader and you're not that adept at doing quick scalps right now, just add to your swing positions or start new swing positions. Right now is not the time to be focusing exclusively on day trading when you don't have any follow through. On Monday, we were teased a little bit by the market with some great movers, a lot of decent follow through on Monday, and then it went right back to what it was. So a way that you can kind of navigate this right now, what we're going through, I advise you guys just to wait until a little bit later, let the morning set up, see kind of what's moving, wait for a legitimate setup. That way you're minimizing your risk as much as possible. All right, guys, that's it for me. Just we don't have much follow through right now, so the swings that you have, just manage them properly. Know that things are very, very cheap right now, and stocks are going to come back up in a vengeance very, very soon. So just wait until the follow through comes back, guys, and sit tight.
So since around August, the market's been a little dry, and every guru has been saying, just wait, volume will pick up. Wait till around September, mid-September, everything will start to pick up. Now that we're here, we're going to kind of give an update. I don't try and time the market. I don't say that this is when the market's definitely going to be back. I use past experience and different indicators to tell me what the market's going to do, but I don't try and time the market. You'll never hear that. So that being said, based on past experience, by around now, the market usually starts to come back and volume starts to pick up in small caps. I tweeted out last week just 4 different tickers that a lot of us pay attention to, and that they were down close to 60% in the last month. And that they were starting to curl, that the charts were starting to curl, which is really, when they start to curl, that's a pretty good sign. And then on top of it, the date, the calendar date. Now that we're getting into mid-September, by now is when the market usually comes back a little bit and the volume starts to hit. Kids are back at school, hedge fund managers aren't going on vacation. So that's a really good sign. And then finally, something where that was really encouraging was Monday. We saw some really good pre-market movers on Monday, and we saw futures were really green on Monday. So that was one of the things that we said to really keep a lookout for, was that when we saw multiple pre-market movers, that would mean that the algos were back, that trading volume over on the penny market had picked up. So that was really good. But the one thing that we have to be cautious of is that think of like a chart. When we're hitting resistance points, okay, it's going to come up, come back down, and then retest. It's same thing with the penny market. The penny market will get hot for a day or two, then it might get, then it might cool off like today. And then, tomorrow it might get hot. And then next week is the real week that it gets hot, or the week after that. So don't get trapped thinking that the market's back, but just take it as a sign that, okay, it's a good sign.
Hey everybody, Mr. Prez here, back for another episode of the Daily Dip. Today's feature is going to be a little different than what I have been doing in the past. Today we're just going to be talking about some of my favorite tools and resources that I like to use when I do my my homework, for the options and large caps that I trade. So quickly, getting right into it. First one I like to use is barchart.com. This one is 100% free. They do offer a premium service like most websites do, but the information that you get just, from the free version alone is pretty invaluable. I like to, they have stocks, ETF information, options, futures, currencies, everything, Forex. So I like to focus on the options side of things. And just right here you see options market overview, unusual options activity, changes in volatility, highest implied volatility, option screeners. So I like to, they even do spreads, they have information and data on all sorts of advanced spreads. So I usually like to go to the unusual options activity. And if you pay for the premium version, you can do some of their advanced screeners and this and that. I like to usually go to the volume/open interest ratios, the implied volatility, and just kind of see what people are speculating on. So if you sort by open interest, you can see all the big boys: DraftKings, Tesla, Boeing. You got some calls, unusual call activity, lots of volume, high open interest on these specific strikes. You can even, I think, download historical data, like past data, for free as well. So yeah, that's bar chart. Bar chart, for costing zero money, provides an insane amount of data for free. My next resource that I like to use is from yumpu.com. It's an Elliott Wave kind of cheat sheet book. I'm not very good at Elliott Wave yet. I do like to practice it kind of on the side. So this tool right here is an amazing way to make sure that all your conditions on your Elliott Wave are being met, and it kind of helps you get an idea of what a condition could come next based on what you're seeing in your wave count now. So this is 8 pages. It works like a little ebook. It goes over wave 1 through wave 3, wave 4, wave 5, and all the conditions that go along with those. It gives multiple scenarios of what could happen in each wave and what it means, what it implies. So this has been pretty invaluable for me as well, and it's 100% free. All right, so that's yumpu.com. I'm not sure the exact thing. You have to search pattern and practical Elliott wave analysis cheat sheet is what it says up here. So I'm sure you just Google that and it'll pop up. This next one is actually I got from Ripster, which I'm sure most of you know the name Ripster. He showed me this website quite a long time ago, but I use it almost every day. Sector Tracker. So this keeps up with all the major ETFs in the S&P, XLC, XLY, XLP, energy, financials, etc. So what you can do with this is a good tool to kind of help visualize the rotation in the market, kind of see where the big money's going. And you can see the time frame, 1 day, 5 days performance, past month performance, all the way up to 5-year performance. So what's cool about this is that you can actually click the ETF that you're trying to look at, and we'll look at technology, and you have all these criterias on the right side that you can sort by. So you can sort it by index weight. You can see what moves the ETF the most. Apple has a 24% weight, and Microsoft has a 20% weight, and then Visa, surprisingly, has a 4.4% weight. You can sort it by, the percent change. So this gives you an idea of, you see where all the money's going or all the money's leaving. You can try to find those topped out plays, those bottomed out plays. Once the money starts rotating in and out of those sectors, you can use this to see which tickers you need to hop into to take advantage of that rotation the most. The next one is going to be Black Box Stocks. This one is a paid subscription. This costs $99 a month, and there's a yearly option available as well. This I mostly use for option money flow. So if you go to the options tab, right in the middle of the screen, you have your options flow. This will tell you how much is coming in. You see Tesla strike 450 put sweep. So that means people are buying all these puts at the ask for about $250,000 worth of premium in that order itself. So if you have a specific stock you're watching, like I'll do Oxy because I know they were pretty bullish yesterday leading into today. You can kind of see this chart right here. This is the open. We open at 1075 and we're up almost $1. And you can see all this flow coming in on Oxy for these $12 strikes. $148,000, $46,000, $38,000. All this premium is coming in. So it helps you, it gives you conviction behind your trades a lot of the times. You have most active calls, most active puts, bullish flow, bearish flow. This is all about seeing where the money is going. And if you follow the big money with options, that itself is an entire strategy that is completely viable. I've met many people that make all their money just following option flow. Black Box has its own Discord, support Discord. They have great mods. Their staff is really attentive to their people, and they're just an overall pretty good company. The last website that we're going to talk about real quick is called tradingvolatility.net. More specifically, you have to put stocks.tradingvolatility.net. But the amount of data that you get from this website for free is insane. This guy should easily be able to charge 100, 200 bucks a month just for this data. So the main thing that we're going to be focusing on with this website are the tools, the tab, more specifically the GEX dashboard and the dark pool dashboard and the max pain levels. So real quick, if we go over to the dark pool dashboard, this shows you current dark pool values. And this website is always updated at the end of a market session, about like an hour and a half to 2 hours after the market closes, so it can gather the dark pool data. So DPI simply means dark pool index. Higher DPI values represent stronger dark pool buying. So what I like to do is I like to sort by DPI, and this kind of gives you a overview of which tickers institutions and big money might be accumulating. So if we click on Twitter, for example, it'll bring you to a visual chart on how you can see what the institutes are doing. It gives you its moving average. It gives you a 10 EMA for the dark pool, and you can just see even to look at yesterday, crazy amounts of buying on Tuesday. So you get a visualization of the dark pool activity, and you also, if you scroll down, they have it linked with trading views, so you get upcoming earnings, EPS, market cap, and you get an entire financials balance sheet. So the dark pool index is a really insane way to get a watch list together and to kind of see what kind of stocks might be being accumulated by institutions. And so the next thing we're going to be going to is the GEX dashboard. which is really hard to explain if you're not familiar with the idea of gamma and gamma exposure. But the three values that we're going to focus on are SA GEX, call skew, and GEX dollar per 1% move. So think of GEX as market makers have to constantly balance their options books. Market makers make most of their money on the transaction fees, so they have to keep all of their books as neutral as possible, delta neutral, all that, for lack of a better, explanation. So gamma exposure is the dollar value of all the speculative calls that are currently open. When you have a high GEX value, this is implying that market makers are buying calls and selling puts. So that's like a borderline bullish scenario. So high GEX values is basically assuming that market makers are buying calls and selling puts. Skew adjusted GEX, they have a quick explanation on everything down here. Positive skew adjusted GEX, daily movement subdued as market makers rehedge by buying as stock falls and adding to shorts as stock price rises. So the moves are probably not going to be as volatile, whereas if you have a negative skew adjusted GEX, daily movement accentuated as market makers rehedge by buying as stock rises and adding to shorts as stock falls. So how do I use this data to find stocks to trade? So the first thing that I like to do is sort it by skew adjusted GEX. You want your highest negative values because this is implying that market makers are buying as the stock rises and selling short when the stock falls, so it can have that momentum behind it. So what I like to do is sort that highest negative value, and then what we look for if you're looking for a long is you're looking for high negative skew adjusted GEX, and you're also looking for a positive high GEX value. So this is insinuating that market makers are buying calls, and then it insinuates that market makers are buying stock to hedge the gamma exposure for those calls. And then the third piece of data that I like to use is the call skew. Obviously, if you have a positive call skew, that means the speculative call buying is higher and more so than the speculative put buying. So real quick, taking a look at the GEX. Basically, this is the dollars per 1% move that market makers must buy or sell to keep their books neutral. So it makes sense that if market makers have to buy a high GEX value with a positive call skew and a high negative skew adjusted GEX, that Amazon could be seeing a decent move higher. Whereas SPX, you can see we've got this huge negative GEX, which means that market makers have to sell this amount to keep their books neutral by this expiration. So this is today. So it makes sense because you have the Fed meeting going on today. So you have a -8 call skew, a high negative GEX, and then a high negative skew adjusted GEX. So you put all that together and it tells you that market makers are selling or buying as the stock rises and falls, which means they're going with the trend. The GEX value tells you that they have to sell this amount to keep their books neutral by today, and there's a negative skew value. So this could be telling you that market makers might be shorting the SPX today in advance of this Fed meeting, which makes sense because you've got this cascade down. All this stuff is kind of like Chinese, but if you like take the time to look at it and observe the market, then for the following day after the data has come out, it starts to make a lot more sense. Like I said, everything you need to know about is down here, all the notes, and after that it just comes down to practice. That's it for my feature today on the Daily Dip. Trading volatility is probably my favorite out of all these, just based on the GEX dashboard and the dark pool dashboard.